can you get a mortgage with just 1 year's self-employed trading figures? Well, let's find out. Hey everyone, welcome back to the channel. My name's Adam. I'm an expert mortgage broker, somewhat of a self-employed expert mortgage broker as well. So I'm going to unpick all the mysteries for you surrounding how long you need to have been self-employed and what your options are if it's not the normal 2 or 3 years that you might expect. So today I'm joined by Tessa, who's going to be asking me some questions that we've trawled the internet for and found out what everyone has been asking about self-employed mortgages and how long you need to have been self-employed. So let's get into it.
Great to chat with you, Adam. How's it all going?
Hi Tessa, yeah, all very good, thank you.
Good,
Keen to
good.
talk about self-employed mortgages as always.
Yes, I know. Well, we've actually got quite a list here, haven't we, of questions
You
that
have,
people
yeah.
are asking. So
Seen the list.
I
Yeah.
know, let's get straight into them then. What are the requirements for getting a mortgage as a self-employed individual with 1 year's accounts? It's quite a mouthful.
That is a mouthful, isn't it? So if you've been trading for just 1 year, there are a couple of lenders that we can go to. The requirement, I would say, really is that you need to be doing something that you were also doing before, maybe employed. So is a couple of popular examples. So if you're an employed electrician, for example, and then you go self-employed, but you're still an electrician, maybe even contract for the firm you were working for before, or that's not too important. But if you go from an employed electrician to self-employed electrician, and then we have 1 year's accounts, and your earnings are kind of similar, probably a little bit more self-employed, that's going to be okay. There's a couple of lenders we can go to like that. If though you are a employed mortgage advisor, let's say, and then you think, I know, I'm going to be a self-employed electrician and just have 1 year's accounts, that's probably going to be less appealing because you haven't got the track record of knowing what you're doing. I mean, I certainly wouldn't, but
Mhm.
you probably can't just sort of decide, I'm going to do this for a year and then expect to get a mortgage. There's the odd lender, if you have a really good first year and it looks all fine, maybe there's maybe a sort of slightly more specialist lender we can go to, but really we need to be going from employed to self-employed 1 year. That's the key, I think, for getting a mortgage with just 1 year's figures.
Okay, so definitely a key takeaway already there to remember. So, what is considered as acceptable proof of income for self-employed mortgage applicants with 1 year's accounts?
So same deal really, however long you've been self-employed. So if you could either be a sole trader, so just self-employed, or you could have your own limited company and just have the first year's accounts. If you're a sole trader, then we're going to need your first year's, we call them SA 302s or tax calculations. And so your accountant will normally be able to generate those for us. And that's just a summary from HMRC showing how much you've earned and how much tax is payable. It's that net profit figure that we're after. So that's your key figure. Alongside that, we get what we call a tax overview, which again is an HMRC document that just shows you've paid the tax for that tax year. Now, that tax might not be due yet, and that's fine, but we have to get the overview as well. If you're a limited company director, we're probably going to ask for your first year's accounts to go alongside those as well. So either way, whatever you are, those are the things we need, even if you've just been going a year. If you've been going more than a year, then we've said before that we need those same documents, we'll just need more of them.
Right, okay, so that all makes sense there. Now, do self employed individuals with 1 year's accounts have access to the same mortgage products as those with longer accounts?
Another long question, but
Very
yes, they
long.
do. It's the same products. However, not so many lenders. There is only a couple of lenders we can go to with 1 year's accounts. And the better the case, the more lenders we'll have. But yeah, generally speaking, not everyone is going to do 1 year's account. So it's the same products from those, whether you've got 1 year's or 10 years figures. If we go to that particular lender, you'll get the same product, but it's just a fewer lenders to go to rather than fewer products.
Okay, and we've probably touched on this next question there anyway, but what sort of steps can I take as a self employed individual to increase my chances of securing a mortgage with 1 year's accounts?
I suppose it's quite common in your first year not to make much profit, because generally you'll write off your expenses, buying equipment and getting set up and things. The more expenses you have, the less profit you'll show. And when you're self-employed, it's all about your profit. And we get this quite a lot. People think, well, I've earned £50,000. We actually, yes, £50,000 has come in. Maybe that's your turnover, but you've spent £30,000 doing that on materials and setup costs and a van or whatever you do, various different costs.
Mhm.
So if it's cost you £30,000 to do that, actually your net profit is only £20,000, and that's the figure that the lender's going to use. So it's a difficult balancing act, and you have to be accurate on your accounts and things. You can't make stuff up. But the more expenses you put through, the lower your net profit is going to be, and so
Okay.
then the less you can borrow.
Okay, so that makes sense as well there. So moving on then, how do lenders assess the affordability of a mortgage for self-employed individuals with 1 year's accounts?
Okay, very much the same as they assess every other mortgage. Really, it's going to be looking at your income and then looking at your outgoings as well. So it's really important we factor in any other kind of debts you've got, loans, credit cards, that sort of thing. And then we're gonna use that. Well, the lender's going to use that to calculate what they'll lend to you. Now, normally we're going to be kind of 4.5 times your income, but the more other debts and things you have in the background, the less that's going to be. Just the same as any other case. So we're going to be looking at a kind of small pool of lenders that will help us with 1 year's accounts, and they're going to factor in all your other outgoings as well. So if you've got that 1 year and it's cost you a fortune to set up the business and you've only shown a little bit of profit, and you've also got credit card and car finance and stuff in the background, we might struggle with 1 year's account. We might need that second year to show the an increase in profit. But if you've got 1 year's accounts and it didn't cost you much to get set up and you just have kind of normal expenditure, then you're going to be in as good a position as anyone else.
Okay, there we go. So hopefully that sounds reassuring. Now, this is an interesting question. So, are self certification mortgages available for self employed individuals with only 1 year's accounts?
No. I could answer that before you even started. No, that's very much a thing of the past. Probably the reason why we got in such a mess in 2008. Well, one of the reasons. No, you can't do that anymore. Everything has to be demonstrated. We have to have proof of income and things. Lenders will only lend what they think you can afford to borrow based on your income and your outgoings and things. So it's much more about your affordability now. So yeah, we definitely have to show proof of income. You can't just say I can afford it. It's fine. We used to do those. I remember doing a few of those
Yeah.
back a good few years ago, but not anymore.
Okay, well, that definitely answers that one, clears that up there.
Yeah.
Now, I don't know how much you can say here either, but what interest rates can I expect as a self employed mortgage applicant with 1 year's accounts?
The same as everyone else, to be honest. Again, from that sort of narrower pool of lenders, we're not going to go to every single lender, but there's a couple of high street lenders that I can think of that will be okay, potentially, depending on your history, and you'll get exactly the same rates as anyone else does that goes with them. It's not lenders nowadays. This is kind of a generic answer, but lenders nowadays, you don't have to qualify for specific rates. It's not like if you're um, if you're certain situation, you get this rate, but if you're this situation, you get this rate. If that lender says yes, they'll lend you some money, and you fit into this bracket with how much deposit you've got or how much equity you've got, then this is the rate you can have, no matter your situation. So if the lender agrees to lend you some money, you'll get the same rate as everyone else.
Okay, so there we go. Now, I think we've definitely covered this, but are there any specific mortgage lenders or financial institutions that specialise in providing mortgages to self employed individuals with 1 year's accounts?
Yes, there are. There's a couple of sort of more high street lenders, and then there's a few sort of um, off piece, should we say? Not like specialists, but sort of middle ground. Lenders that are set up to do a little bit less business, but a little bit more specialist. But the more specialist you get, the higher the rate gets. So if we can keep it on the high street, that's always good. So there are. yes, a handful of lenders to go to with 1 year's account. So we're not talking a massive choice, but there are definitely lenders that we can go to.
Okay, well, that's good news. Really good news there. Now, you might have touched on documents a little bit earlier on, but just to kind of confirm them all, what documents do I need to gather as a self employed individual applying for a mortgage with 1 year's accounts?
Yeah, we did, but so your first year's tax calculation, so that normally runs from April to April, the tax year. So your tax calculation and tax overview, that's going to show how much tax you owe or have paid, depending on when in the year it is. If you've got a limited company, then it depends on the lender, but some lenders might just want the same figures, the same documents. It'll just have different figures on there. It'll have your salary and your dividend on there. It'd be useful to have the first year accounts as well to show the lender, because we might go to a lender that looks at accounts instead of your tax figures. So it's slightly complex depending on your situation. Really, the best thing to do is speak to a broker to know which lenders we're going to go to, so which documents. But generally speaking, if we start with your tax calculations for the first year, that's a good start.
Okay, and are there any additional criteria or considerations that self employed individuals with 1 year's worth of accounts should be aware of when applying for a mortgage?
These are some long questions, aren't
Very long. I
they?
know, I'm kind of out of breath as I'm reading
Yeah.
them.
um, no, not really. No, it's the same. It's the same deal whether you got 1 year or 10 years. It doesn't really matter. It's just really that narrower pool of lenders that we're gonna focus on, and that history that I said at the start. If you're employed to self-employed in the same field, that's going to put you in a much better position than if you're changing careers and then having 1 year self-employed.
Okay, there we go. Now, how long does the mortgage application process usually take for self employed individuals with 1 year's accounts?
um, no longer than anyone else, to be honest. So yeah, it's not like we're jumping through extra hoops or anything. I'd normally allow 2 to 3 weeks to get your mortgage application agreed from start to finish, because generally lenders have questions along the way and things, and we have to wait for their processing times. Generally lenders are quite busy, and so we submit an application, then it's a few days for them to kind of look at it, and then they might ask a question, and then we answer it, and then it's a few days for them to look at it again, and then they'll do a valuation, and that'll take a few days to come back. So generally, it can be a good couple of weeks. Sometimes it's all kind of system driven, and someone has a quick look at it and says yes, that's fine, and the system says yes, and we get a mortgage offer. I think our record is about 3 minutes, because it's all just system driven. But that's rare compared to normally. It's normally a week or two.
Okay, so that just gives people a rough idea there. Now, this is a great question, and I think it's going to be easy for
Oh,
you to
okay.
answer, Adam. Is it beneficial to work with a mortgage advisor or broker when applying for a mortgage as a
Yes.
self employed individual with 1 year's accounts?
Yes, absolutely. Because you can compare the Meerkat or whatever other platform you use, but they are not going to tell you which lenders are going to consider your income and not. And there'll be some information on Google, but people aren't necessarily going to sort of advertise which lenders to go to,
Mm.
because that's what we're here for. That's what you pay us to do, and it also changes from time to time as well. So lenders will kind of change their criteria to suit what sort of business they want, and how busy they are and things. So it changes over time. But a good mortgage broker is always going to know which lenders we can go to and which lenders to avoid on any situation. So 1 year self-employed is one of those situations.
Okay, there we go. Now, people would also like to know, can I apply for a joint mortgage with a partner who has a regular income, even if I am self employed with 1 year's accounts?
Yeah, absolutely. If we need to use your income, though, we need to go to the same lenders as if it was just you. So we need to go to the handful of lenders, but then those lenders will also use the partner's income who is just employed normally. So that'll be absolutely fine. So we're still restricted to the same lenders that we would be if it was just one person.
Right, okay. And are there any specific challenges or risks that self employed individuals face when applying for a mortgage with 1 year's accounts that we perhaps haven't already mentioned?
Not really. I mean, the volatility of being self-employed at any time really is a risk, isn't it? But then
Mm.
that's why you want to be self-employed. Probably that's same for anyone that runs their own business or is self-employed. Things go up and down, and so you can have good years and bad years. And if you have a couple of good years, then you can borrow more if you want to. If you have a couple of bad years, then you can borrow less, and you may even be restricted. If you take your mortgage based on your first good year, but then it dips down a bit, remortgaging might be tricky if your income isn't the same as it was when you did it, and vice versa. If you take a mortgage in the early part of your business, and then a few years later you've got some good figures behind you. Maybe you could move and you can move up because you can borrow more now. So, there's no particular risks associated with 1 year over anyone else. I suppose from the lender's point of view, really, they're just thinking about the risk of you kind of knowing what you're doing in your first year of business. And that's probably a bit patronizing to a lot of people that have set up a business and had 1 year self-employed, because they've probably been doing a similar thing for a long time. Some people haven't. But from the lender point of view, it's making sure that your income is consistent and you're always going to be able to pay the mortgage. So the last thing they want to do really is repossess you, because it costs them money. So they don't want to do that. So they need to make sure that they have checks and things in place to make sure that that's never going to be an issue. And that's why a lot of lenders shy away from this and want more track history. But yeah, there are a few lenders that we can go to.
Okay, so good news again there. So, what happens if my 1 year accounts show low or fluctuating income? Can I still qualify for a mortgage?
Yes, you can. It just might not be a very big one. So if you've got, I think we said at the start, if your
Mm.
first year is low, then that's the figure that they're going to use to assess how much you can afford to borrow. So let's go back to that electrician that was employed on 40 grand, maybe, and then gone self-employed, and it's taken a little while to get set up and find customers and things. And the first year's £20,000 net profit. It's the £20,000 we're looking at there. That's what we're basing our lending on. Even though you were used to earning more employed, that's gone and forgotten about now. You're self-employed now, and so that's the income that we're using. So yeah, that's just one of those things. But it's the same for everyone that runs their own business. You might have good years and bad years, and if we're looking at the most recent bad year, then that's going to affect your affordability.
Okay, so something to bear in mind there. What impact does credit history have on the mortgage application process for self employed individuals with 1 year of accounts?
Credit score will have quite a big impact because it's all about risk for the lender, remember. So the lender that is going to give us a mortgage, if you've got 1 year self-employed, is going to want you to tick a lot of other boxes. They're going to want us to be quite clean credit history. So um, yeah, if we've got credit problems, that kind of makes it harder for the lender to think, yeah, this person's going to be okay. If you've got missed and late payments all over the place and 1 year self-employed, I think we're going to struggle to get that mortgage lender to take a chance on us. Yeah, so that is
Mm.
that is quite a factor.
Okay. Now, are there any government schemes or support available to assist self employed individuals with 1 year's worth of accounts in getting a mortgage?
Not that I can think of right now. No. Government schemes tend to be for first time buyers. So, if you're a first time buyer, then, lifetime ISA and that sort of stuff, just the same as anyone else. But there's no government scheme specifically for um, the self employed when it comes to mortgages, kind of full stop, really, however long you've been trading. But the ISA is available to anyone if you're a first time buyer. So make use of that.
Okay, so that's a good option there. And I suppose following on from that as well, there's a question here that asks, are there any alternatives to traditional mortgages that may be more suitable for self employed individuals with 1 year's of accounts?
I would say no, not really. The kind of mortgage lenders we're going to go to are fairly sort of mainstream in their approach. The, there's not really much innovation really in the industry when it comes to kind of specialist schemes and things. You kind of have a mortgage and it kind of works in the same way for anyone really. some people, it depends how much you want to borrow and how much equity or deposit you've got. Some people like to take a bit more mortgage on interest only. So we'll talk about interest only probably another day, but that's where you just repay. Well, you don't repay it. It's where you just cover the interest each and every month. And you're not actually repaying the loan. For self-employed people, that can work sometimes. If you have good years and bad years, and the good years you overpay to pay your mortgage off more, and the bad years you don't. You've just got to cover the interest. So you see that from time to time. But as far as kind of specialist schemes and certain help and things goes, that you're just kind of in the mix with everyone else, really.
Okay, so that's useful to know there, so you know where you stand. So we're getting through these now. There's been tons of questions, hasn't there? So
Loads of questions. Good.
here's the next one then. Can I use additional sources of income, such as rental income from properties or dividends, when applying for a mortgage as a self-employed individual with 1 year's of accounts?
Yes, you can. Yeah. So most lenders will take pretty much all income into account. The rental income is a funny one. Some different lenders do different things, and so some lenders will look at the rental income, and then they will look at the mortgage on that property, and they'll take the difference into account for your affordability. But the lenders that do that might not be the same lenders that do 1 year self-employed. So we have to kind of join these two bits of criteria together. Some lenders will use rental income if it's on your tax return. So if it's showing on your tax return profit from land and property, then potentially we can use that figure because that normally factors in the mortgage and all the other costs and things you have running that property. So if you've got a profit to show on your tax return, then the lender may be more inclined to use that. But again, it's pairing that with 1 year self-employed lender. In terms of other income and things, any other income that you've got, kind of normal, benefits and maintenance and other income, from a partner or whatever, we can use that as well. Yeah, I think that covers pretty much all the income types.
Okay, there we go. And just lastly, then, is it possible to make overpayments or pay off a mortgage earlier as a self employed individual with 1 year's of accounts?
Yes, absolutely. Yeah. So whether you self-employed, employed, 1 year's accounts, 10 years accounts, doesn't matter. Every lender will let you overpay to a certain extent. It's normally 10% of the balance extra per year. So if you owe £200,000, you could overpay £20,000 in that year. So normally a reasonable chunk you can overpay without paying a penalty. If you go over that 10%, normally you get a penalty depending how long you're tied in for and who the lender is. Change the penalty from sort of 1% to 5%, be in that sort of region. But yes, you can always overpay. Generally speaking, with most lenders, you can overpay on your mortgage. I think that pretty much sums it all up, really. That's 1 year's self-employed mortgages. The summary really is, yes, you can get a mortgage potentially if you've got 1 year self-employed. So if you want to find out if that's applicable to you or what your kind of situation is, you can book an appointment with us anytime. There's a link in the description to do that. Link in the description as well to the website. Go and check that out. You can read all this information we've gone through as well. So hopefully we'll be speaking to you really soon. If not, see you on the next video. Take care.